Hello and welcome to the Daily Market Report from IG. Well, it looks like we're going to get off to a pretty decent start here in Australia. We're calling the market up about 27 points. A lot of that's going to be down premised to what we see in the banks today, and from the first blush numbers that we've seen from ANZ, who reported their first half earnings, the numbers look pretty good. Cash earnings up about 10% or so. It's 3.18 billion, which seems to be above the consensus at 3.13. We've seen a dividend which came out at 73 cents. I think the market was looking for 68 cents. So clearly the dividend trade, which has been working very, very well for the banks, should continue, and certainly that dividend yield should continue to be reinforced, especially when you're seeing the Australian 10-year government bond just north of 3%. So clearly the dividend yield from the banks is still very, very positive compared to what you're getting in cash rates and what you're going to be getting from bond markets at the moment. Net interest margins at 2.25%. We're pretty much bang in line with what the market was expecting, and return on equity you're getting around 15.5% as well, which probably is just marginally north of what the market was looking for. So ANZ at the moment technically looks great. It's in making a series of higher highs and higher lows at the moment. If I was in the stock, I certainly wouldn't be looking to offload anytime soon. And this trade, what we've been seeing from the earnings, really justifies what we've been seeing. And the stock was trading prior to today at around 12 times earnings, which is not massively expensive in any shape or form. It's pretty much in line with where the sort of historic average has been over the last 4 or 5 years or so. So I think on a PE basis, I don't think it's particularly expensive. So hopefully this earnings report that we've seen today from ANZ should be well received by the market and should continue to reinforce the dividend yield trade, which has been doing very well. So we've got a positive open, and we are coming. This is the last trading day of the year and of the month, should I say? And we may see some flows on the back of that. So what's been performing well this month? Telcos, staples, and financials, and that should continue to be reinforced today. 11:30, we've got the private sector credit numbers. They're expected to be up very, very marginally as well. So a good number, say 0.5% growth on the month, should certainly help the Australian dollar, and will be very interesting to see how that's received by the markets. We don't expect it to have a massive ramification ahead of next week RBA's decision. But if we look in the US, we did see the S&P print and close at a new high, a new closing high, should I say, although it still looks like it really wants to test that 1600 level in the short term. We did see the material stocks doing quite well there, although I don't think that's going to be hugely reinforced on our market today. The ADRs from what we were seeing from Rio, BHP, Newcrest Mining, for example, don't look overly positive. And I think really what we saw, for me, what was really positive is coming out of Italy. We did see over the weekend the Italian government being reinforced there, and perhaps there's a few cynics who said longer term we've still got a few tests on whether they can put through the long-running reforms. But I think at the moment the market seems to be rejoicing the fact they've managed to cobble themselves a government together. We did see the Italian 10-year drop down 14 basis points, and looks like it wants to test the 2010 lows in the short to medium term as well. We did see a very strong bond auction last night in the 5 and 10 year as well, so that's obviously very positive. We want to be able to see that both domestic and foreign investors are still happy to buy Italian debt, despite the fact that they are at the lowest yields for quite some time as well. And I think the other big story in Europe is the fact that we are starting to see this slight move away from the austerity measures, which have really kept growth very low in Europe, and potentially more pro-growth measures coming through. The fact that on Friday that the EU are reasonably welcoming in extending Spain a 2-year extension to try and meet those deficit targets to get down to 3% of GDP is very interesting for me. Whether the bond rating agencies will think the same thing is very interesting, because Spain are one notch away from going into junk territory. And of course, in Italy, Mr. Letta, is the new Prime Minister, has said that he will reverse some of the different measures that Mario Monti put in place, such as the property tax. So in Europe, we are starting to see this slight change of away from austerity and slight pro-growth, and I think that's keeping the euro supported in the short term. But overall, we are looking for a reasonably positive open here in Australia. Whether the materials sector can keep up with the financials today is yet to be seen. I still think this is a sector that most people in the markets are still very much underweight. But yeah, positive day, and some big information today, namely coming out from Germany with the retail sales. We've got the unemployment numbers as well, and then we should see the Italian government pass the upper house confidence vote as well. So positive day to be seen, and you will see how Europe trades later on.